Today was a particularly strange day in the market. We started the market up quite strongly, and that seemed like, oh, maybe we hit a bottom yesterday. S&P pulling out of correction territory, and was bullish. First thing, right at the open, even more so in the pre-market. But then the day continued, and it looks like some air kind of just left the bubble. And I'm not saying the market is in a bubble, but this is what air leaving the bubble looks like. There's more selling than buying, and the market just continuously just goes down. And you can see that dynamic play out in the market. Nothing crazy seemed to happen today, Obviously, we're getting these Ukraine-Russia headlines here and there, but, we were up in the morning, and we got sanctions yesterday. So it seems pretty clear that Russia-Ukraine is not directly impacting the market so strongly. And if you look at history, invasions that are not World War II have actually been buying opportunities in the market, and the market has kind of bottomed on the invasion. So I don't think we need to worry about Russia-Ukraine too much. We're certainly looking at it. I think there is potential for things to calm down. Russia, as far as I'm aware, and look, I've got friends who care a lot about this, is not a globalist, world-dominating country. They can't be, even if they wanted to be. I'm not trying to pick sides or anything here. We're just trying to look at the facts here. But their economy is not massive. They can't take over the world. So we really just got to chill out and be the United States for a little bit and not be trying to impose our hegemony on the entire world. That's really what's causing this whole thing. It's the globalists. But not part of the video. Just important to think about that there's a lot of perspectives in the Russia-Ukraine thing. The market is really trying to dissect the truth, and I think we're seeing that it's not really the most important thing. What is the most important thing is likely the Fed, which is still printing money and is going to stop imminently and shortly, and then they're going to begin to tighten. And the talk has been, well, we've increased easy money at a rapid pace. There's no reason why we can't decrease easy money at that same pace now that we're no longer in an environment requiring easy money. So we should expect some choppy waters. That's all I'm going to say. What we can expect, how much they can impact the market, etc., is up to debate. But raising rates was the one thing that deflated the dot-com bubble. And I'm not saying we're in that environment. I'm not saying that. I don't think we're in that environment. We have a very much more mature tech environment where the biggest tech companies make tremendous money and actually are valued relative to that money that they make and that cash pile they have. I'm looking at Apple, Microsoft, Google, Amazon, etc. And they're getting punished when that's not the case, like Meta. Meta got a serious punishing. However, there are a few companies that have a little too much speculation in them, and some speculation is warranted, but in my opinion, now you're entitled to your opinion, but in my opinion, the speculation aspect kind of has like a reverse curve. But for some stocks, the speculation has seemed to pick up as the stocks got more expensive and the companies got more mature. In my opinion, where I reserve my speculation is for the earlier stage companies. That's when I'm really willing to pay up in terms of multiple, when they're early stage. I don't want to pay up for Shopify, Spotify, Wix, and most importantly, and this is the example we're going to use, and I just want to disclose, I am a huge fan of its founder, and I'm a huge fan of its product and its philosophy, everything about this company. But Tesla is the prime example of this notion. And I'm not saying that the stock will not reach these levels. Okay? We're not going to talk about that right now. What I am going to point out is that Elon Musk said the stock was overvalued, lower than where it is. And we got much higher than where we are now. I still think it's too expensive. Why do I think it's too expensive? Let's look at those companies that are cheaper and are, in my opinion, warranting speculation. A lot of them peaked a year ago, January, February 2021. They saw big runs throughout 2020, pandemic winners, etc., peaked at that period and have spent a year selling off. Tesla and many companies like Tesla, but not the smaller market cap companies, the larger market cap companies that had excess speculation built into them. And this is really, in my opinion, where the crux of this pullback and this volatility and this chop and this pain is going to be felt, and has been felt. These companies had a local peak with the smaller speculative stocks, and then they pulled back for 2-3 months, and then the summer hit, and the Fed was still pumping liquidity. And it was warm weather in New York, and people were happy, and they were rich. So what do? They bought these stocks all the way up, from all the way up. They somehow moved a mountain. It's crazy. Anyways, that occurred, and it stayed like that for a little bit until the Fed began becoming hawkish. And now the Fed's becoming hawkish, but they haven't done anything. They're just talking tough. But they're gonna have to do something. So once they do something, something might occur in the stocks, or it might not. We'll see. I don't know with certainty. The market seems to be reacting to the hawkish talk. Maybe they're accurately predicting it, and everything is factored in, and we're close to the bottom. That is certainly a possibility, and I'm not ruling that out, but it doesn't align with history, and who cares? It doesn't need to align with history. We've seen many new things occur. But I just feel the need to exercise patience. I'm not trying to hit a home run right now. I've got positions that I think are fundamentally sound and are doing well, and I'm going to keep my wealth in those positions until the positions getting hit are hit enough, many of which I don't think are hit enough, or I see signs of a bottom. And today's action of a just open green, everyone wakes up, buying stocks, and then closing down quite substantially, and nothing extreme causing that, no news event, just a slow from the balloon. I'm not convinced we're at the bottom. I'm not yet. Not with the Fed coming up. Not with the Fed still printing. So that's today's video. We'll see what happens. These are my opinions and thoughts. And until next time, peace out.